Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a narrow range, but so far the buyers have held ES above that 24.28 support. And off the open, we're going to use 28 to 30 as the initial support zone, as well as the micro bull bear zone to establish our intraday bias. As long as the buyers can continue to hold ES above 28 to 30, the door is still open for higher prices. And from there, if we can get a breakout above 34 quarter to 36 quarter, that would serve as a confirmation that buyers are stepping in. And then from there, as long as we're seeing bullish signals in real time and some decent upside momentum, ES could quite easily tag yesterday's high at 24.40. Beyond that, we have resistance at 42.75 to 45 quarter. That is an area where we could see profit taking and some rotation on first test, but if we're heading higher on broad market strength and participation from the other markets, then we may only get a reaction at 42.75 to 45 quarter. So that's something that we will have to assess in real time, and that's going to depend on just how the market gets there, how the other markets are shaping up, whether we are seeing sustained upside momentum and an upward trending AD line or not. So those are some of the things that we'll need to watch for in real time. Now, on the downside, in the event that the market breaks below 28, as long as we're seeing broad market weakness and some sustained downside momentum, then a breakdown below 28 could attract more sellers in this market, and we could get a liquidation move down into 20 quarter and the 16 quarter to 1875 zone. Now, that's still an area where responsive buyers can be active on first test, especially if the market is exhausted into it. And then in order to break down and continue below 16 quarter, we would have to see excess weakness on the day time frame or trend down type internals and the other markets liquidating as well. If those conditions are present, then the market could even probe below 16 quarter down into the 12.5 recent swing low and potentially 08 quarter to 11 quarter, where again responsive buyers can be active. So the way the market is set up today, we are at a bit of an inflection point. This is a make it or break it spot, at least on the smaller time frame for buyers. So if they are going to hold this together, then today's the day where the buy side could really be tested. So if they can hold it above 28 to 30, and then if we can get a breakout beyond 34 quarter, 36 quarter, that would serve as a confirmation that the buy side is dominant, and that would bring 42.75 to 45 quarter into play. And if there is sufficient volume and upside momentum, then we could even go higher into 46.75, the 47.5 gap, and possibly even the 49.5 to 51.5 resistance, which marks the all-time high. And then in the event that the market fails to hold above 28 to 30, that could result in some long liquidation down to 20 quarter, 16 quarter 1875, and potentially lower as long as we're seeing a lot of weakness and trend down type internals with the other markets selling off as well. So that's something we'll have to assess in real time. But on first test, responsive buyers can defend 16 quarter to 1875. Now, given that the market is so far in a very balanced state, our short-term bias heading into the open is going to be neutral. But then if we get a breakout beyond initial resistance or a breakdown below initial support, and we are seeing those real-time signals of directional conviction, then our intraday bias is not necessarily going to be neutral anymore. If we're seeing directional conviction, then we'll know that that side is in control. So as long as the market is stuck between initial support and initial resistance, the short-term bias is neutral, even the intraday bias is neutral. But once we get a breakout beyond initial resistance or a breakdown below initial support, as long as those real-time signals are there showing us directional conviction, via a trending advanced decline line, via sustained momentum on the tick and the other markets participating, then our intraday bias is no longer going to be neutral, and we're going to favor trades in the direction of the break, whether it be to the upside or the downside. And 28 to 30 is going to serve as the micro bull bear zone to help us establish that intraday bias. So those are the main ideas heading into the open. Let's see if the buy side can hold it together at 28 to 30, and we'll take it from there.